Gold is continuing its streak this week on the back of falling equities, so can this continue? Joining me today is Bill Baruch, president of Blue Line Futures. Bill, thanks so much for joining us.
Thank you for having me on again.
So, million-dollar question here, is gold's rally a mere reaction to equities, Bill, or are other fundamentals at play?
Well, actually, I'm looking at gold rallying on the heels of the strengthening Chinese yuan. It was up as much as 1.75% on the week, and then it's pared back as that U.S. and China trade truce has sort of fallen apart at the seams. You know, so that's the reason why gold hasn't made really extended new highs at any sort of velocity through these last couple sessions as equity markets picked up. But we also have what I call in my research a major three-star resistance level. Comes in at 1250, 1252. And on top of that, this seasonally isn't really the time where you want to be buying gold. So this non-farm payroll report sort of worries me. But I do like gold in the second half of November. Every year I find that to be a very great seasonal trade heading into January.
So, Bill, let me ask you, we are launching our Outlook series next week. The theme is Rush to Safety. Is gold still a safe haven here, or do you think the dollar's taken over this title?
The dollar has had that safe haven wins for much of this year, but I think gold is going to really regain that. And I think I might have said second half of November, but what I meant was second half of December. And that's really when I think gold is going to take the reins. You get that Fed meeting December 19th, and traditionally the past several years, we've seen gold really take a liking to their less hawkish or more dovish rhetoric, and it's aligning up right now. You got a lot of headwinds globally on growth. What's uncertainty now behind the U.S. and China and trade, and then on top of that, you got the 5-year, 3-year Treasury inversion. So this is just a small part of the curve inverting. But what it did is bring a massive tailwind to what the 30-year has done. 30-year's been up about 3% more than that now after today's session on the week, and really that's going to support gold. The Treasury scenario, that landscape, I think is very supportive. I'm looking at the 10-year yields, and really what we're seeing is an ascending wedge in the yields. And if the 10-year yield gets below about 275 and closes below there, we could see a breakdown that could quickly get to, there's a 263 support and a 2.5 support. But I think if this 10-year yield really starts falling down quite a bit, gold is going to like that a lot heading into January.
Bill, let's shift gears here. Maybe there's a bigger story at play with Palladium.
Yeah, I like Palladium. I've liked it all year, and I remember doing a story with you back in end of last year talking about Palladium. Right now, one thing I think that no one's really talking about associated with Palladium is the fact that the White House may roll back or take off the solar car credits. So you could see even more of a push towards the catalytic converter, or the need of those catalytic converters in cars. So ultimately, that's what's driving Palladium. One of the major drivers. It's been a very good, very probably the best performing commodity on the board this year. But I'm looking for support, so it's where to buy. You have 1100 as an area, as well as the 50-day moving average, which is trailing. So I'm looking for pullbacks in Palladium. I think there's going to be very good buying opportunities. You may have to sit through a bit of pain in the first quarter of next year if the global market it has a little bit of uncertainty. But I think if you manage your risk to the downside, Palladium, building a position in the first quarter of next year is going to be a tremendous gain throughout 2019.
And then just quickly here, Bill, just some thoughts on silver. A lot of analysts I've been speaking to quite bullish on silver for next year. Obviously been a horrific year for the metal 2018. Can it turn around?
Well, it hasn't got any interest on those moves up. It hasn't followed through. Right now, it's about against the 50-day moving average, 1450. And really, when something consolidates like it has, it usually builds for a directional move. I favor that directional move being higher. I think we could see $16 silver, but I still like gold. I think gold could really outpace it a bit. But silver has the ability to move, and I don't want a time when silver really moves relative to that ratio against gold and silver. I like gold more, but I think the downside is very limited here in silver, and I think you're going to see it start to wake up a bit in that first quarter as well as gold moves higher.
Bill Baruch, thank you so much for joining us from the floor of the CME. Thank you.
Thank you.
And thanks for watching. We'll have more Outlook for you. Stay tuned.